Good morning, everybody. So, after yesterday's down day in the market, which I was expecting, maybe you were as well, you're thinking, okay, that down day has to continue. Liquidity is being pulled out of the market. So, let me talk about liquidity really quickly, and then we'll talk about why I am a bear, but I actually think today could potentially be green, followed by tomorrow, we might not see a pullback like everybody's assuming. So, I'll explain that. But let's first get into what's on tap. We've got jobless claims at 8:30 this morning, wholesale inventories at 10 a.m. So again, NASDAQ had its worst day since April 25th. How could anybody be bullish going into today? Okay, now I'll mention what possibilities there are to be bullish. Okay, yesterday's Russell 2000, the IWM, the Russell, second largest call volume day ever, only second to Tuesday. So those of you that joined me yesterday morning, and I mentioned the call volume on the Russell was through the roof. And the last time we saw something like that, the call volume on the Qs was through the roof, and the Qs ran from 325 all the way up to 350, about 8%. So is the Russell going to move 8%? I'm not promising that. What I'm telling you is second largest call volume day yesterday, only to the day before on Tuesday. So understand they're piling into the Russell calls. Also, it was the seventh largest QQQ call volume day ever. So as the markets and the Qs were being sold off, people were re-entering calls on the Q. Now, why did the market sell off yesterday? I mentioned liquidity issues. So the government, the Fed's checking account, let's say how we pay for all our bills, was down to about $32 billion. They mentioned by the end of the month that they'd like to have $475 billion back in that checking account to pay our bills. So I mentioned yesterday that the government was planning on selling $800 billion worth of treasuries by the end of the month. I've heard $1 trillion sometimes. We did $163 billion on Monday. So how does that pull liquidity out of the market? Well, you have these banks, institutions, other large investors that are yielding. What are short-term rates paying now? Like 5%. So you could put 5%, get 5% by buying treasuries, whether it's a 2-year treasury or what have you, which is a nice, safe investment. So rather than investing and buying some more Apple stock or Microsoft stock, you're going to buy these treasuries. In addition, let's say I need money to buy treasuries and I've just had returns that are through the roof on NVIDIA. What am I going to do? I'm going to sell my NVIDIA stock. So there is some consolidation going down. Now, here's the point I'm trying to make on why the market can continue higher. And people are like, man, this guy must be smoking crack. His market's going higher. No, let me explain why, okay? Yesterday, when we look at net new highs on the NASDAQ, okay, stocks that made new highs yesterday versus the day before. The previous day, 48 new stocks made new highs on the NASDAQ. Yesterday, 94 stocks made new highs. So you got those 48, plus you got another, 46 that made new highs. So now you're at 94 yesterday that made new highs. New York Stock Exchange went through those as well. You had 92 highs the day before yesterday. After yesterday's day of trading, you now have 145 stocks that have reached a new high, a new all-time high. So everybody that's so bearish, understand there is bullish sentiment. Next, the pullback yesterday, blah, 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 blah. Let me just see. No, that's not that important. Okay, here we go. Market cap distortion. So listen carefully to this. All right. Despite the S&P 500 closing red yesterday, right? The S&P, the SPY closing red yesterday, 69% of the stocks in that index actually went up, were green. So the S&P, the SPY closed red yesterday, right? Down 0.35%. However, close to 70% of stocks that make up the SPY, the S&P, were higher, 69%. And the average return for those stocks that finished higher, those 69% of stocks that finished higher, was 1.83. So things were actually much more bullish than it appeared. With that said, we've got the Qs touching 348. Let me just see. Okay, mentioned this yesterday morning. I mentioned market manipulation by hedge funds, banks, institutions, analysts. When they come out with a price target, it's to push the stock higher or to push the stock lower. Okay, let's remember the Carvana price target. What was it, 3 months ago, where companies or analysts were coming out saying Carvana's worth less than $1, worth 50 cents a share, worth $1 a share. Understand, Carvana came out and they came out with some type of earnings for the second quarter this morning, and the stock is squeezing up 25% pre-market, going from $15 and change up to $19.50. So eyes on the prize there. More manipulation. You had Netflix yesterday. Remember, 2 days ago it was as high as $414. Then it went down to $396. It closed at $400 on Tuesday. You had analysts come out yesterday morning, one from JP Morgan Chase, saying $470 per share. Basically an increase or of a price target of 18%. You had another analyst come out from a major bank and say their price target is $500 a share. So what are retail investors going to do? They're going to pile into Netflix. What happened to Netflix yesterday? Opened up at $419 a share. $419 a share off those upgrades, right? Yes, it's a good thing. Make sure you chase. However, went as low as $399.23. So literally dropped 4% from the high of the day, right, which is early in the morning, to just under $399. So understand, let's say I'm a bank and an institution. I want to get out of my Netflix. It ran from $255 all the way past $400. How do I get rid of it? Well, I come out with a price target increase. Hey, Netflix, $470. Goes up to $419. I sell all of my shares. Netflix comes down to $400 a share. And, as an institution, I'm happy. Tesla finishes green for the 9th straight day, its longest winning streak since 2021. Cleveland Fed, not that important. Debt ceiling, can't really talk about this. I mean, how bad is Jim Cramer, okay? So Jim Cramer says, stop talking about the Canadian wildfires. They'll go away. In fact, they won't affect anything in the United States, right? He literally said that. Hours later, FAA breaking news. FAA halts flights inbound from New York to LaGuardia amid smoke from Canadian wildfires. So he's saying it won't affect anything. I mean, this dude is like the biggest curse. He said AI was great for Google and Amazon and a couple of these other big tech players. However, one of these investors came out yesterday and he said, you know what? It could be the end of Google search and some other search. I've got to look more into it. Okay, let's talk about my play from 2 days ago, and I repeated it yesterday, even though the play was down. I spoke about SPY puts expiring on Friday at the 425 level. I mentioned it 2 days ago. I said I'm going to look for the lowest entry point. I got in at like $74, $75. I bought some more. My average actually went up to $80. They opened up yesterday again. 425 puts for Friday, okay? They opened up yesterday around $44 per contract, went all the way down to $39 a contract. Where did they go up to? $94 a contract. Again, I got out just barely green because I realized the fact yesterday morning my position was down 50%. So my entry sucked. I had a 102.7 fever yesterday morning. I was actually thinking about buying more of this contract at 40 cents, taking my average price down to 60. I didn't because I was like, when I am sick, I actually trade like shit. I see things and I see most of the story and most of the picture. But if I leave one category out, that might change the whole outcome of what I'm looking at, which is what I do. So again, that's why I didn't trade yesterday. I did enter into some Freeport stock FCX yesterday, 37.73. Where did it go after? It went down to like $37.50. Understand, as the US dollar goes down, okay, gold will go up. All right. So my play on gold was this mining company. I know they have a huge play on copper. Mentioned what was this position yesterday? Closed up 73%. Why did it close up 73%? Remember, I was in Chewy puts. Same thing. When I got into Chewy puts, I was negative on the trade for, I don't know, for the first day I was in. I was down, 60%. I made 73 and a little more percent yesterday. I'm still down 10% on the trade. I pulled out. Dying here. After I pulled out, Chewy went even higher. I could have returned a lot on that trade. Sorry. Thank you for sticking with me. I'm really not doing well this morning. I have the flu. I have fever, chills, and my throat is absolutely killing me. So talking isn't the best thing. George Soros Fund Management, he says we're still going to see more bank failures. So, yeah, I get it. I kind of agree with him, but I don't think it'll be until later on this summer. Um, he also believes we're in a mega cycle for AI investments. Interesting. This is what I meant for the Treasury. Again, for the end of the week, Treasury expects cash pile to be around 425 billion, whereas we were sitting around 38 billion. After 2 days ago, we were back to 71 billion. We're still 380 billion away. Even if you take all the money that was generated from the T-bills, Treasury sales, which would be 163 billion, they still need to sell another 270 billion worth of T-bills. So I mentioned this earlier at the start of the video. It doesn't pull liquidity out of the market per se that easily. What happens is banks say we're going to earn 5% on the 2-year. We're going to earn 4.6% on the 6-month. It's better than being in the market. We're wary of the market. So what are we going to do? We're going to take profit on our Apple that ran. We're going to take profit on our Nvidia, our Google, our Amazon. We're going to pull liquidity out of the market. We're going to buy these T-bills, put them on our balance sheet. We're going to earn that 4.86% or whatever that is. So that is how liquidity gets pulled from the market. If you like what I do, please thumbs up. I'm here for you. I'm not here for me to hear myself talk. I'm here to answer questions. If you have questions, ask them on the side. And here's what I mentioned yesterday. Okay, there was a record amount of call buying on the Russell. This happened recently for the NASDAQ and sent techs flying. So again, Tuesday, call buying on the Russell, number one all year. Yesterday was followed up with the second highest volume day of call buying on the Russell. So the fact that there is a pullback yesterday, it tells me it's only going to be temporary. Again, I'm a freaking bear, so I would like the market to drop and reality to set in with everybody that Europe's going through recession. China's struggling. China asked their banks to please lower the deposit ratios they need to have in hand. China also did something sparking auto sales. I forget what it was that they did yesterday, or they announced some type of promoting auto sales, which would be like a Neo, a Li, Teslas in China, et cetera, et cetera. I mentioned Kathy bought 420,000 more shares of Coinbase on Tuesday. I said I would stay the heck away from it. Again, I've heard rumors of fines to Coinbase, and Coinbase will countersue the SEC, and I'm sure a settlement will be reached, and maybe that's why Kathy's buying her shares. But if the SEC proves their case and levies these fines on Coinbase, I heard it could be anywhere from 5 to 6 billion. If Coinbase market cap is 12.5 to 13 billion, and they have to pay $5 billion in fines, then you're talking about like a 40% of their entire market cap would go to paying fines. So, I mean, the stock has to go down. Again, I don't take a position because I assumed Kathy would be buying. I assumed other cronies would be buying, pushing the shares up. In fact, after hours, it was up like 2.5%. I think this morning it's down 2%. Let's just see where we're at here. Okay, so the Russell, everything kind of went up, and this probably happened after the jobs numbers that were released at 8:30. Let's check out Russell. Here we go. Little selling. SPYs up 0.08%. Spiked exactly at 8:30. So Q's 16%. Again, I gave you my reasoning on why I think the markets could definitely pop a little higher today. So let's look at the dark pool levels and just get that out of the way. Dark pool levels, pull up Discord. What am I seeing? 428.84. I mentioned that yesterday. 426.85, which is the next level down, which we finished slightly there under. Okay. So this 426.85 is an important level as we close at 426.55. Why? Because if you look at these two zones right in the middle, there's almost no volume here, which calls them ghost zones. Meaning once we lose support at this 426.85 and we're opening down there, any type of volume can quickly push the market down to the 420.88 level, which is the whole reason I got into my SPY puts that expired on Friday. Again, I'm out of those SPY puts. Why? Because I thought the market would actually turn green today. And again, I mentioned the reasoning why, and I'll mention that one more time because I don't have that much in me today. But again, spot gamma released. Russell's second largest call volume, only second to Tuesday. So Tuesday and Wednesday, Russell call volume off the freaking charts. The last time we saw that, the Qs ran. Yesterday, right? New highs on Tuesday for the NASDAQ, 48 companies. New highs Wednesday, 94 companies. So shit, that went up. New York Stock Exchange, new highs on Tuesday, 92 companies reached new highs. Yesterday, 145 companies reached new highs. So, I mean, that's pretty crazy. And then I mentioned a distortion yesterday. The S&P closed down 0.35%. However, 69% of companies in the S&P 500 actually increased in value, and they went up an average of 1.83%. So even though everybody thinks yesterday was such a shit day and the market's going to collapse on itself, almost 70% of S&P companies went up 1.83% yesterday. So holy shit. I mean, figure that out. Point is, they continue to buy the dip. This buy the dip strategy is kind of continuing to work. Again, I got into FCX, Freeman, McNamara. Why? Because I thought if the US dollar goes down, which I could see the trend happening, gold will increase. And then I'm looking at oil and other commodities, which are going up. Steel went up. So I'm saying to myself, this could be a safer play. Of course, after I went and I saw somebody sell a block share, 250,000 shares at like $37 and like 74 cents. Then it went down to $34 and like 40 cents or 53 cents. And then now it's up this morning, 37.85. So I would gladly take close to $39. I would need like a 3% move. All right, so I'm going to answer a couple questions. If you like what I do, please give a thumbs up. Let's just go. Kramer looks like a praying mantis and acts like one. Okay, so understand, Jim Cramer used to run a hedge fund. He did a lot of corrupt, illegal shit back then. He would say one thing and do another. This is what hedge funds do. They tell you the stock market's going down. You sell to them. They're buying up, push the market up. They always have an underlying thought process, and generally what they say is not actually what they mean. Get some rest. Yeah, if you want me to get some rest, how about a thumbs up? Make a question, comment, something like that. Join me on Discord. That's cool. What's up, Ellie? Always appreciate your positivity. Kumar, feel better. What do I think about Square and the airline industry? Okay, so airlines, we can start off. I mentioned the other day that airlines were being bought up. I think United Airlines was $47.21. And that's the one that I follow, United Airlines, because they go to Europe and they're all over the place. And that was $47.21. Now, this morning, pre-market, they closed at $49.39. But right now, they're down a little pre-market. So it's $49.21, up a full $2 in about, 3 days? Is that what it was? Maybe it's 4 days. Also, you can see the cruise ships are going through the roof. I mean, Carnival was $11. Where's Carnival today? Let's just cover that. Again, I would stay away from the casinos. Casinos actually just got downgraded from 135 to 115 price target. Worries over China and Chinese closings. So here we have the 1 month of Carnival going from basically $10 all the way to 13, so 30%. Strong buying. There will likely be a pullback. Nothing goes straight up or straight down. But yeah, that's what I would think. Neo, I think you're a little late. I mean, China already came out with this news saying that they're doing a promotion for their auto sales in China. They've already asked their banks to reduce the deposit, the amount of money they have to hold, which means there's more money for the Chinese economy. Exports in China year over year, I mentioned this yesterday, they were estimated to go up 8%. They went down 7.5%. So the Chinese economy is struggling. Neo's numbers haven't been that good, but I actually was looking for it to pop. I know it was up about 3% this morning, and they had earnings. So here's your chart on Neo. For me, it's a stay away. Why? Because they just had earnings. IV will come down. So if you're thinking about going and buying the dip for Neo, you want to wait for Neo to come back to $7.30. You want it to be off 4 or 5% from where it is now. That's the only way I would actually buy this company. I would not chase at an $8 valuation or something like that, because if we go back a month, $7.33, $7.25. That's where I'd want to be in. And if it doesn't happen, it doesn't happen. I would just be on the sidelines. We have Affirm Technologies, which I mentioned I was in last week because I was expecting Affirm to squeeze. What happened yesterday? It squeezed up to $19.50. closed at $16.20. We'll probably squeeze again. Affirm. Right now, what's squeezing is Carvana. Carvana was up, 27% this morning. It's pulling back a little, but it'll probably hold. It'll probably hold, especially if today is a green day. Then I wouldn't expect Carvana to sell off. However, if today turns out to be like yesterday and we go down in the market, then you can see the same thing that happened to Affirm. It popped to 19. It finished at 16. Carvana popped to 19. Let's see where it finishes. Red day, it's going to finish at 16. Green day in the market, it could doubly pop. It could sell off. It can consolidate the higher level and can have another pop in the afternoon. If you're not in it, I would not chase Carvana up 23 or 24% this morning. Interesting. I mentioned Meta. Of all the big tech players going into yesterday, and they were short Tesla, which I wouldn't touch. They were short Nvidia, which I wouldn't touch, talking about hedge funds, and Meta. And I said, if I had to pick one of these three to bet against, it would be Meta. Meta dropped 2.77% yesterday, $7.50. Does that mean I'm still a Meta bear? Kind of shit that I heard from Meta this morning about all the pornography and other things that are on Instagram that link pedophiles to underage people that are selling pictures and other things. Really disappointed in Meta, disappointed in Instagram. However, we know that doesn't really affect the market. We know that terrible stories come out about companies, and if the company's making the almighty dollar, it continues to go higher. So I wouldn't be shorting any tech companies today. I already mentioned this pre-market. Do I have any idea about DocuStock? Its earnings after? No, I have no clue. I don't follow that stock. In fact, I would suggest to everybody to please limit the number of stocks you follow. I used to have 200 on my watch list. Every day I remove 2 or 3 stocks. I'm down to 45 stocks. Why? Because if Docu moves up or down, it really doesn't affect me. I have Net or Cloudflare on my watch list. I haven't traded Cloudflare in 2 years. So again, I don't want to be in there. Okay, I see a question. So Docu, let me just look at the 1 month. It's following other big tech. It had a strong run up. It sold off yesterday. I don't know enough about the company to decide on earnings, so I couldn't tell you one way or the other. So I apologize about that. What do I think about Palantir today? Again, Palantir will likely push. What do I think about it today? I don't know about today, but again, they were selling the shit out of it yesterday. It opened up $17. It went actually down 5%. So it opened up $17. Let's see. It was at 15, like probably 40, 15, something like that. 15.40 went up to $17. So it was up $1.60. It was up probably 10%. And then it closed yesterday down 5%. So understand, if a stock opens up 10% and closes down 5%, there were a ton of people unloading, securing profit. This is the same Palantir. After earnings, it shot up to $10.10, pulled back to $9.40 at 9:38, at 9:42, at 9:45. I got involved with options. These are the same options that returned 1,100%. I didn't say I made 1,100%, but they returned 1,100%. So Palantir, today, I don't know. You tell me Palantir and the market doesn't collapse in 6 months, then Palantir is probably going to be an $18, $19 stock. That fact that it's at $14.69 right now. If I was going to take a longer position, that's not how I trade. I trade swing trades, shorter term trades. I'm in and out, looking for profit, secure profit, move on to the next trade. But if I was a long-term player, yeah, I mean, I could definitely start averaging cost into Palantir with 100 shares at $14.69, 114, 113.50, whatever it is. I could sell at 17. I could sell at 16. I could wait for it to come back down. But yeah, I mean, Palantir will probably step higher unless the company comes out with something terrible. But they hit a 52-week high yesterday. So understand, when stocks hit highs, they generally go even higher. So the fact that Palantir pulled back to 14.52, closed at 14.69. Where's it this morning? Probably completely flat, right? Yeah, I saw it this morning. It was up like 2.5%, and then it was down 2.5%. So any stock that is that volatile pre-market to go up 2.5%, down 2.5%, up 10% yesterday, down 5% to close out yesterday, I don't want to be involved unless I'm 100% sure I know the direction. Understand, if you're playing Palantir calls and you got in even at a good price yesterday, 16.10, it went up to 17, you didn't sell, and you closed at 14.64, you're getting rocked. You're off probably 70%, and you were positive probably like 35-40%, which is another reason I suggest the 3 S's, and I'm going to leave everybody with that, right? When we trade, we look for safe trades, we look to secure profit, and we're looking for stress-free days, right? All 3 of those equal a winning trader. If you're on the sidelines showing patience, then congratulations to you. You're not in the market losing money. So when you come up with a complete strategy, I want you to have entry point. Let's say you want to enter Palantir and you say to yourself, okay, where's the entry? My entry can be $14.14. So if your entry is $14.14 on Palantir and it's at $14.69, you're not buying. You're looking for it to come down. When it hits that 14.14 mark, you already know, hey, just because it's having a red day today, I might be catching a falling knife, but I think in 2 weeks it's going to be higher. So you go out, you buy your options 2 weeks out, June 23rd, June 30th, whatever. You're giving yourself enough time to be right. So you're entering in at your entry point, 14.14. Your exit strategy could be like, okay, it went to $17.16 yesterday. I'll call $17 my exit. 14.14 is my entry. 17 is my exit. Whether you're playing stock or options, you have a complete game plan. It strikes down. You're like, okay, I'm entering in. You have a backup plan as well. If it goes lower, say it goes to 13.50 after you bought your options, you should have a stop loss in place. A tight stop loss, if you're catching the knife on the way down, you put in a 10, 12% stop loss. That way, okay, I was wrong about entry. Great, I lost 12%. I lost $12 on my $100 trade. I'm not down $32. I'm not down $40 to start a trade. So that's how, I like to trade, especially smaller accounts. Again, I showed everybody my Chewy puts yesterday or 2 days ago were down 69%. Yesterday, they made about, 80, 90% back. Again, I'm down 10% on the trade as a whole. I could have been up 20% on the trade if I'd held a little longer, but I was in such a bad position that I said, you know what? I was correct. Chewy hit the $37 mark. I'm out. Where did it go? It went to like $36 and like 40 cents, 30 cents. I don't know. With that said, heading over to Discord, I will be talking about the dark pool levels for the SPY and exactly what I'm looking to see today. Bull case scenario, bear case scenario. I'm going to keep it short, condensed. So anybody that wants to watch that, please follow us over to Discord, soc-platform.com. Again, soc-platform.com. And I'll see everybody tomorrow. Hopefully my voice and my throat is better and my fever is down.